The idea of a tech IPO bubble. For years, we've been bemoaning the fact that there are all these big companies that have such major potential valuations that have not come public. Now that they're talking about public, we're ready to jump in and say it's an IPO bubble. Which is the truth?
Well, I don't know if there's going to be an IPO bubble yet or not, but for sure I know that there's a pre-IPO bubble. The valuations in private markets are at an all-time high. Last year, a total amount of venture money that went into startups was about $130 billion, and a full 49% of that was in round sizes that were greater than $100 million. So we're certainly seeing the bubble before the IPO. So far, we believe that the public markets have stayed rational in the way they are looking at multiples for as these unicorns go public.
You think $120 billion is rational for Uber?
Well, it remains to be seen. Certainly, like I said, in the private markets, I would consider that as a very high valuation. I'm hoping that the public markets will be rational when the stock comes out.
Meaning
it could be anywhere between $90 billion and $120 billion.
Okay, so but you're thinking that $120 billion is not a rational number in the private
I actually believe that's on the high side.
So what you think $90 billion would be a fair valuation for Uber in the public markets?
I believe somewhere in that range would be more fair.
Meaning that you think the last investors on any of these big unicorns are going to have to take a haircut once these things go public?
It's a possibility, absolutely.
But Ajay, Lyft's valuing around 10 times sales. I mean, that's not that aggressive. Facebook was about 34 times sales when it listed.
Yeah, so I think, it's a possibility with some of these companies that the markets will accept the higher multiples based on the growth. But I think with some of the other companies, the growth may have slowed down.
It's not just the growth that matters or the sales that matter. It's a path to profitability. Do you see a path to profitability?
Yeah, and that's actually very elusive for most of these companies, and that's going to be the biggest issue with the public markets.
Can you expound on that?
Well, I think that unless there's a clear path to profitability over the next 3 to 5 years, the public markets are going to look at some of these IPOs with concerns.
Would you recommend that a retail investor actually buy in at the opening if you see a discounted valuation from what's being bandied about today?
I think there is going to be an interest in the retail market for some of these stocks because these are some of the early IPOs in the on-demand sector. And I think there's a lot of customer connection to these companies because they're using these services. So I would think that there will be initial demand, but it remains to be seen what happens in the longer term.
Ajay, what's your take on what the fact that these are coming to market right now says about the valuations of the broader NASDAQ and the equity markets?
So I think that the valuations, as I mentioned, in the private markets have been very, very high. We don't see that bubble on the private side changing anytime soon. I think what's driving that is that a lot of the companies are actually creating value ahead of the IPO, much more so than before. If you look at when Amazon went public, it was only at a $500 million market cap. When Google went public several years ago, it was only at about a $23 billion market cap. Now we're seeing these companies go out at very, very high valuations. And the reason for that is that a lot of the value creation has happened before the IPOs. In fact, many of the rounds that I was talking about earlier are effectively pre-IPO rounds. And so, a lot more of the value is created before the IPO. So it remains to be seen how much more value is created after the IPOs.
I mean, I guess that's my question, too, though. Who do you think gets left holding the bag? Because in the past, when we'd seen these really high-flying IPOs, a lot of times it's the initial investors, the retail investors, who get left holding the bag. But because these companies have been private for so much longer, the valuations have run up quite a bit. Do you think there's the potential that the earlier investors, the pre-public investors, are the ones that get left holding the bag?
It's a possibility. Also, it could be that a lot of the pre-public investors take liquidity fairly soon after the IPO when there's a rush to buy the initial equities.